Hello, everyone. Thank you for joining today's webinar. Um, to understand ARK's newest ETF edition, the ARK Space Exploration and Innovation ETF. My name is Ren Leggi. I'm the ARK's client portfolio manager. And I'm joined by my colleague, Sam Corris, who is our energy storage, battery, technology / robotics and space research analyst. So before we get started, there's just a few housekeeping items to address. So the first is on the webcast interface. You'll notice that it is interactive and customizable. So you can click and hold on the box to drag it around to another position. And then you can also click and hold the box in the edge or the corner and drag it to stretch it and make it bigger. Each box has an X in upper right-hand corner, which allows you to close that box. So you can go back to the default layout by clicking the round double arrow button on the bottom center icon bar. And that's the first button on the left there. The next thing I want to address is questions. We encourage you to ask questions at any time during the webcast by typing it in the Ask a Question section of the Q&A box in the lower right-hand portion of the screen. You can click the Submit to send that to the queue, and we'll pick it up on our end and answer any questions in our Q&A section at the end of the webcast. So this system captures all questions submitted, so if you don't get your question answered live, we'll be able to follow up with you directly. And then finally, if you have experienced any technical difficulties, please try refreshing your browser. That tends to clear up most of the issues on the local network. So if your issue persists, you can send it you can send the issue to the webcast tech via the Q&A box. So our tech is monitoring the live event and will be able to answer your question directly. So with that, let's get started. So today we will be focusing on the ARK Space Exploration and Innovation Fund. We've seen that space exploration has really been around since before the internet. The industry, the aerospace industry, has been around for a very long time. At ARK, we are focused on investing in disruptive technologies, and we don't get caught up in the hype or the promise of a technology when investing. It has to make investable sense, and we think the aerospace industry has hit that tipping point. We conduct all original research to not only understand the technology, but also to focus on the cost declines associated with these technologies to help us identify where we are hitting that tipping point in the cost decline of a technology that is going to unleash a tremendous amount of demand for that technology. And we think we've hit that tipping point when it comes to the aerospace industry. And we think that having exposure to a fund that is focused on these technologies will provide kind of long-term capital growth opportunities for investors. Now, we are focused on 5 disruptive innovation platforms, and 3 of those platforms touch on the space fund. So energy storage, robotics, and artificial intelligence. So we think that the space exploration and innovation ETF really invest in companies beyond just space exploration. We've even broken the space ecosystem down into kind of 4 major categories. So at this point, maybe I'll turn to Sam and see, could you kind of walk us through these 4 categories?
Sure. And I'd say this is somewhat what differentiates us between some of the other ETF providers out there looking at space is, there is outer space, and, we've kind of framed that as the orbital aerospace opportunity, which you can see in the top left here. And so those are companies that launch, make, service, or operate platforms in orbital space. So you can think of rockets and satellites. That's normally where the space picture stops for a lot of people. But really, as Ren was saying, we look far beyond that because there's tons of opportunities that are both making this happen and benefiting from it. So we have suborbital aerospace, and that's the area just below orbital aerospace, and you can think of that as potentially hypersonic point-to-point travel, long-term pseudo-satellite type drones that provide internet or observation. Then another very important one are enabling technologies. And everyone says invest in the picks and shovels, and this enabling technologies area is the way that we capture that. And so in here, we look at energy storage, which is very important for drone technology, robotics, which are super important not just for the manufacturing, but then potentially for operation of items that are in space. And robot out in space does far better than a person out in space. And then a really key one here is 3D printing, and we can dive into that more if there is plenty of time. And then we get into the aerospace beneficiaries, and I already see some questions on this. When we launched this fund, we got all of the memes. We appreciate those as well, saying tractors in space, farming on Mars. But that's not the case. So aerospace beneficiaries, these are companies that are benefiting from activities in aerospace or outer space. And so in this, you can get companies like John Deere that are really benefiting from precision agriculture. And this is using satellite technology, not just for autonomous tractors and things of that nature, but for really mapping out and using deep learning to understand how pattern is affecting your field and what parts of the field need different types of irrigation or may need to be harvested sooner than others. And similarly, we'll get into this as well, a company like Netflix that is benefiting potentially significantly as more people are connected to the internet. So that kind of gives a broad framework of how we look at this opportunity.
So Sam, maybe we can jump into each of these categories in a little bit more detail. The first one is around kind of the number of launches in terms of satellites and what we have planned for the future. Could you walk us through a little bit on that?
Sure. And this really comes into play. And what we're looking at here is the end result, right? So we're going to go from having roughly 1,700 active satellites orbiting Earth, in the 2010 timeframe to over 25,000. So this is going to be a 10x jump in the number of satellites. And along with that, there's going to come a whole host of other things. You get the benefits from manufacturing these. You're going to get the services that come from having these satellites up. But before we get there, right, this is kind of that endpoint. And so what's leading to this, I think, is the important question to ask here. And so what we're seeing in orbital aerospace is 3 cost declines occurring at the same time. And this is something that we look for, not just in space, but in all of our investments, is, this cost decline caused by technology, where you hit a tipping point in demand. And so what we've had in the orbital aerospace arena is rocket cost declines, satellite cost declines, and then end user terminal, how you get data from those satellite cost declines. And right here, we're seeing the manifestation of the rocket and satellite cost decline. And what it used to be is that if you wanted global coverage of the Earth, you would send up 3 geosynchronous satellites. And so these are satellites that are 22,000 miles away from Earth. And since they're so far away, they cover, roughly a third of the Earth. So you put up 3, you have global coverage. But since they're so far away, it's extremely limited the type of service that they can provide. And so, this kind of very talked about satellite internet broadband, there are satellite internet providers today, and they're all, in my opinion, would be awful. Right? We're not living in 1995 anymore where we're willing to wait, 4 seconds between clicking and something happening. And so since the information has to travel so far away, it just limits the type of service available. What's happening now are satellites in low Earth orbit. And so these are satellites that are, 300 to 400 miles above the surface of the Earth. So far, far closer. Now, the downside of that is that since they're far closer, they cover a much smaller area. And so what that means is that instead of launching 3 for global coverage, you have to launch tens, or hundreds, or as some people are going after, thousands. And so that's really what's changing this and what's leading to this huge uptick in the number of satellites. And it's all worth it because now you have that satellite cost decline, you have that rocket launch cost decline, and the business models are working because of those cost declines. So, you know, if launch costs were still what they were just 10 years ago, you would never say, I'm going to launch 25,000 satellites. That would be insane. But these cost declines are enabling these new business models to occur. And that's why, it's so exciting right now.
So it's cheaper to get to space, right? We can launch more of these satellites. What are some of the benefits of that? Like having more satellites in space in terms of global connectivity, how do we benefit from that from an investment perspective?
Sure. And I think, this ties into those aerospace beneficiaries. And I think Netflix has something like 200 million paying subscribers currently. And in the US alone, there's 40 million people without access to broadband internet. So that's kind of crazy. It's like you assume whatever you want for take rate. I think, a streaming, likely if you get broadband for the first time ever, I think people are going to adopt streaming services or other internet-based services pretty rapidly. And then, kind of an incredible increase in quality of life for someone in the US. But then, you can look internationally, and this has huge implications for developing countries as well. And this ability to kind of leapfrog here. I would say, though, when we look at this, since it is coming down a cost curve, we do expect this to start in developed nations where you have companies and businesses and individuals who can afford it at that higher price point, and then help drive that cost down, where then it starts to be applicable to everyone. And I think, Ren, we were talking, I think, pretty recently about this. There are interesting geopolitical implications of a, truly borderless internet. And so, you could imagine that if you could sneak in a satellite dish to China, and then this person has access to like global data, or somewhere like North Korea, that could kind of change the nature of the internet, and it makes it much harder to establish these kind of geopolitical firewalls. Although I have no doubt that those will. There's already things going in place to try and ensure that, but I know there are countries where satellite TV is illegal, and the number of people with satellites watching TV in those countries is very high. So there could be some very interesting outcomes there.
Yeah, that's pretty interesting. I mean, and on this next slide, part of that you touched on global connectivity, right? And it's interesting to know that 50% of the people in the world today don't have access to broadband internet. And so that's opening up, like you mentioned, Netflix, other opportunities. But another really interesting topic that I know you've done a lot of work on is hypersonic point-to-point travel. Could you maybe talk a little bit on some of the work we did there?
Sure. And I know I know we're going to get into some of the details and how we scope that out. But I think the takeaway here is, right now we're kind of just focusing on this orbital aerospace and everything that orbital space is providing. This could be orbital or suborbital. People are tackling it in different ways. But just the opportunity and the dramatic change that could occur if we could travel across the world in 2 to 3 hours instead of 14 hours. And so we think that, this is a huge opportunity, not just from like a travel perspective necessarily, but, from the way the world works. This could fundamentally shift that. And then I also love here is, the multi-planetary species element of this. And, some people say this is sci-fi, but SpaceX's Starship just landed yesterday for the first time, fully intact. So we're making progress to make this a reality. people have been on the International Space Station for 20 years. I think it's, you know, it's within fairly close reach that humans will have a permanent base on the moon and then eventually Mars. And that one we have not yet dimensioned, but I'm sure at some point we will.
What is your best guess on time frame on that?
I'd like to think that we could get to the moon and start setting up a base in 5 years. So Mars maybe a little bit longer, but I'm very excited.
Okay, all right. What about hypersonic point-to-point travel? Do you see that within the next 10 years?
Yeah, I think 10 years is probably the right time frame to think about that opportunity, which is also kind of exciting, right? We could be on the moon and living there, maybe do a tourist trip, and maybe that happens before hypersonic. It's interesting to think about it like that.
Yeah. So maybe going back to kind of the satellite broadband kind of opportunity. You've done some work on kind of dimensioning what that opportunity could be, and here's a slide here on kind of the sizing of the opportunity. And what we do, for at ARK is really do a lot of cost decline work, right? Looking at the cost declines associated with these satellites, and kind of dimensioning how big the opportunity could be. And when it's, we come to a total addressable market that's significantly higher than what the broader market is expecting, that's when it becomes very interesting to us. And then we kind of go out and try to find the companies that are best positioned to be the winners here. So Sam, could you maybe talk about how you size this opportunity and how big it could actually be over the next, and our time horizon is, minimum of 5 years. So we're talking about, 5 to 10 years out. In some areas of space, it could be a little farther out, but at least the names that are making their way in the portfolio are within kind of that time horizon.
Definitely. So, as I said, we think this is probably going to start developed countries first. And so, if we just look at America, you have 42 million Americans without access to broadband in the US, roughly 2.6 people per household. Our average broadband bill is $50. My guess is that, this could fluctuate here. You pay that on a monthly basis. And so I would say, the analysis here is fairly straightforward and I would say conservative. So a $10 billion annual addressable market just for individuals in the US. Then, we talked about globally, half the population, 3 billion. But then again, international and developing countries have larger households than developed. And so that could be 5 people per household potentially. And then there's just no way that internationally people are going to pay $50 for a service. And so if you pull that down to something that's more realistic or representative at $5 a month, you get to a $40 billion annual addressable market. And so, that alone is a huge opportunity. And then you layer in, right, you have the mobility market. So that's the planes, trains, and automobiles. And that could be another $36 billion market in 2025. And then, another element here is governments. Everyone we talk to says that, they say every 3-letter acronym is interested in satellite services, right? So FBI, CIA, like DEA, all of them, and that's just, US. And then you have every country around the world who is looking for similar type of exposure there. So, all in, we think it would be fairly conservative to say that over the fairly medium term, this could be a $100 billion annual addressable market, which is pretty significant. And then I've seen a bunch of these questions come in, so maybe I can just tackle some of these here. With all of these satellites planned, is it going to create space pollution? What about, here's another one, what about all these satellites and things coming back to Earth? Do we need to be worried about it? And so for the first one there, space debris is definitely a issue and a growing issue. And right now we don't see this as a impenetrable barrier to cross here, but it's something that people are already aware of, which is good. And it's also providing a very unique opportunity. And so there are a number of companies that are seeking to do essentially space cleanup. So I think more and more as this market develops, we'll see this be solved by a potentially interesting business here. And then as far as things coming back to the Earth, right now, most of the companies operating and doing this are fairly responsible in having planned ways of deorbiting satellites. I think there's a Chinese rocket that's tumbling through space and gonna come back to Earth tomorrow, is what they're estimating. So, we need to get more people to abide by these safer regulations. But I do think that we're moving in that direction anyway.
Very cool. Now let's jump back to, I guess, the more I don't know. I would love to get to Japan in 2 hours. Hypersonic travel, and how big that opportunity could be, right? And it's fairly straightforward, but not something people are really talking about in the markets yet. There's a company that we own in the portfolio that is kind of focused on that. So walk us through some of the work that you've done there on sizing this opportunity as well.
Sure. And I think it's kind of amazing, right? 4.5 billion people flew in 2018, similar number in 2019, much fewer in 2020. But that's coming back, and I think all of us are eager to get out there. But when you're looking at hypersonic, really you're targeting these markets that are, or flights that are greater than 7 hours long. It doesn't really make sense to go hypersonic, from New York to Chicago, where you probably overshoot it anyway. But so if you just look at those flights over 7 hours, you get to 680 million passengers who flew on those types of flights. And then again, we're looking at cost declines. So we're doing this first cut of, a very high price point that will eventually come down. So we're looking at people who flew private and what percent of people fly private. And that's, 0.4%. And that includes companies and business travel where they're chartering private flights as well. And so you get down to this 2.7 million person annual addressable market. And, the way we get to this $100,000 ticket to start is by what people are willing to pay for private today based on time savings. And that comes out to roughly $15,000 for every 2 hours saved on a private plane. And if you're saving the time you would 13 hours going to Japan, because now you're on a 2 to 3 hour flight, then we think you could reasonably charge $100,000, and you would have this market that would still be willing to pay that. And so just that alone gets to a $270 billion annual addressable market to start, as those costs continue to come down. And so that kind of gives a description of the way that some of our top-down modeling looks like.
Okay, when it comes to hypersonic travel and satellite, the two topics we just discussed, what are some of the holdings in the portfolio that provide exposure to those potential opportunities?
Sure. So I'd say from the satellite and global broadband side, less so on the broadband, but on the global connectivity, Iridium is a very interesting company, and it often gets overlooked because of its history, right? So Iridium was part of the initial boom bust in the 90s, and they're kind of a perfect example. It's like part of why they went bankrupt initially was because the costs were too high. And we often say this about that era, not just for space, but even for technology, internet companies, right? All of the ideas and the seeds were planted then, but the costs weren't ready for prime time. And now we've gotten to this point. Iridium, with its new constellation, was a believer in SpaceX from the beginning. So they partnered with SpaceX, got lower launch costs there. And now they have the new constellation up. And the interesting thing there is that it uses a different, it's a different bandwidth than what internet connectors are looking to use. And so they're focused on like safety and constant connectivity. And so they've partnered with Amazon Web Services to provide cloud services to remote locations. They've just entered the global maritime distress market, and it's niche, but it's been a monopoly for the past 20 years. And this is the first time someone can compete, and they can compete at a better price. So they're doing a lot of interesting things that are, I think, being overlooked. And then on the hypersonic element here, I think, again, people look at some of the big companies and they say, what are you doing here? But a lot of innovation comes from government and government contractors. And I think that's been true throughout history. And so Lockheed Martin is doing a lot of work on the hypersonic missile front. And we do believe that, that's probably going to be a leading indicator for commercialization of that type of technology.
Mm-hmm. Very interesting. The other topic I want to touch on, and this is, one that's, I guess, less talked about when, we're talking about the space exploration side of things, but this fund does include a lot more and goes beyond that. And we think that's one of the differentiating factors of the fund. There are a few other space-focused strategies out there. And our portfolio is a little bit more broader than that because we are focused on basically anything above the Earth's surface. And some of the work that your partner analyst, Tasha Keenely, has done has been on kind of the drone side and drone delivery of, food, medical supplies, and eventually maybe people. Could you maybe talk a little bit about some of the work that we've done there? I know you haven't done some of the work directly, but because it is kind of crossing over, these technologies are converging. Energy storage, we think these are going to be powered by batteries, and so we've seen that cost decline drop pretty significantly, and then kind of the autonomous technology is improving pretty significantly and making a lot of this possible. And I think the pandemic has helped kind of accelerate this technology, right? And so we're seeing that this could maybe happen sooner than many expect. As in China, I know they were testing a lot of these autonomous drones in terms of delivery of medical supplies and even food, as nobody wanted to go out to restaurants. That may be still the case in some parts of the world, but how do you think about that opportunity? How big could that be in comparison to some of these other opportunities in the fund?
Yeah, drones excite me, delivery drones, air taxis. But I think, right, a good place to start is why now? I think that's always a good place to start. That's where we started this one. And so what's happening with drones is that battery technology's improved and gotten cheaper. And so we're kind of at this technological tipping point where all of a sudden this is starting to make sense. And then, that convergence that you mentioned that pairs with artificial intelligence, really computer vision is a key thing here for autonomous flight and that type of delivery. And so, the implication there is that the cost of a 10-mile drone delivery, if it was remotely piloted, that'd be, roughly $7 to $8. And if it was autonomous, it'd be a quarter. So a pretty profound impact on savings there. And, people say, what about regulations here? What's happening? And this actually is probably just in the last half a year. The government is really warming up to drones and recognizing that the US was behind, right? So if we look globally, who are the leaders as far as adopting this technology and being favorable to it? You have New Zealand, you have China, who is very welcoming to it. You have the UK that was fairly open to it. And I think what the US saw was that they missed the boat to some extent. And there's a company called DJI that made consumer drones, and those took off. And then the US banned any government agency from using them because they're Chinese. And so the US government recognized, okay, we need to actually get ahead of this as we start to move to larger form factors and air taxis and things like that. So we're seeing the FAA actually being much more forward thinking now than we had in the past. And so, you were mentioning delivery items. And so to give a comparison here, if you did drone delivery for pharmacy like medicine, you could get it in probably 10 minutes for less than $1, as opposed to, if you were to take a Uber or Lyft or your own car, it would probably take you longer to get to the pharmacy and it would cost more. Another big use case we're seeing is inspection, not just of bridges, but of power lines, pretty much any type of infrastructure. And what we're seeing is that here, drones are able to do it in a fraction of the time. So in like an hour and for $1,000, as opposed to if it's a human who has to do it, it can take roughly 7 to 8 hours. And since you're paying someone to be in a dangerous area or maybe go to a remote location, it can be in the $4,000 to $5,000 range. When we look at packages, Tasha's done incredible work on what Amazon could do with its delivery. It's Prime Air, I think, is what it would call it. And so that could be delivery that would cost you, cents, as opposed to if you're trying to get something to someone quickly. I know in New York, a bike courier is $125 or something like that. And so you can just imagine that, one, this is incredible for end consumers, for people who are trying to use this, but it would actually change how e-commerce happens in the US and internationally if it's adopted. And so we think that drone delivery can actually increase the rate of adoption and penetration of e-commerce, which is pretty profound, I think. And one way to think about this is, you never need to go to the corner store. Maybe it changes how you grocery shop, right? Instead of getting everything at once, maybe you're just going to cook one meal and you say, oh, I need fresh tomatoes. And then you get a lovely drone delivery to your window 5 minutes later. And that's, those are the delivery drones. And then there's the air taxis, which I'm personally very, very excited about. Going from downtown Manhattan to JFK right now is a roughly 1.5 hour commitment. It depends on what type of traffic you're dealing with. And it can cost roughly, $70 to $80 in a Uber. And in air taxi, the modeling we've done there is that it could get you there in probably 15 minutes for the exact same price. And so we think there's going to be huge demand for these air taxis, and they don't need to go a long distance. They just need to go over traffic bottlenecks. And so globally, there are a lot of these traffic bottlenecks that are short distance, so still capable of achieving with the current battery technology we have today, and providing a lot of utility.
Yeah. And this is a question that actually came in that's a good one. Can drone delivery be done in mass, right? Won't there be issues with noise? I mean, you have these drones buzzing by your head. Like, how do you control that? Is that kind of an issue, and could actually slow maybe the adoption of drone delivery, whether it's people, food, or medical devices, right?
Mm-hmm. Yeah, I think issue and opportunity go hand in hand. So I think there is going to be a big opportunity for remote, um, remote air traffic controlling. So it's like right now, and I think this is true just for planes today. Like there are certain flight corridors that are at capacity, just because air traffic control is such a manual and human-driven thing. With drones, we're already seeing companies come out that are doing uh, deep learning to route and ensure that drones don't hit each other. I think that the noise issue is something that's being actively looked at and solved. Um, and I think for drones in a city, depends how high above you they were, but like the ambient noise in a city is fairly loud. And then there's actually just a study out. Google has a Project Wing, which is their drone delivery, and I believe they had a test case being done in Virginia. And so they gave a survey to everyone in the neighborhood before drone delivery started. And it was kind of a classic example of surveys being meaningless. But before the drones came, everyone said, no, this is going to be awful. It's going to be too loud. Like, don't want it. And then afterwards, they did the survey and it was like, oh, this is a pretty good service. I think I would still use it. It's like, does it bother you? No, not at all. So I think the convenience is going to win people over. Although obviously there are always hurdles to overcome, and it's potential that they could route flights along certain corridors. Maybe they fly along highway lanes or loud or well-traveled roads in the suburbs. So I think people are actively seeking ways to mitigate those concerns.
Yeah. Oh, that's very interesting. And then one of the other enabling technologies, and in fact, I think it's the second largest holding is our 3D printing ETF. 3D printing is basically the killer app for the aerospace industry. Kind of walk the audience through kind of our view there and how big that industry could be, and why you would want kind of exposure to it, and why it makes sense in a space focused fund.
Absolutely. And again, this is a technology that we think is being overlooked because of its past, right? There was this hype cycle for consumer 3D printing. Everyone will have a 3D printer. They'll print out a fork and knife for dinner. That was never kind of the future that we envisioned. And the way that we look at it is really there's these three segments of manufacturing that are addressable with 3D printing. And there you have the prototypes. And this is where 3D printing has really dominated. But that's a smaller market. So roughly $12.5 billion market potential. And 3D printing is already widely adopted in this market. So roughly 40 to 50% penetration there. Then you have molds and tooling, and that's a bigger market, and that's roughly $30 billion opportunity. And 3D printing is only at a 4% penetration there. But then what Ren's talking about, and this is why it's the killer application for aerospace, is this end use parts. So not a test thing, but it's like you're 3D printing a part that's going on the end plane, the end rocket. And this is close to a $500 billion market. And we're just at the earliest stages of market penetration here, so roughly 1%. And most of those applications are aerospace. And the reason for that is that in aerospace, there are a lot of very complex, low volume parts where weight is critical. So even though its prices come down, it's pretty expensive to send something up into space. If you can cut down on weight, that's incredibly helpful. And also what we're seeing, Lockheed Martin tested it out with a satellite fuel tank, and they tested it, and now that's like the default option. There's another company that created a satellite hub, so it's like the body of a satellite, and they were able to reduce the number of parts, I think, by over 100 parts, right? So it's just simpler, stronger, and cheaper. And it is good for low volume production, and that's kind of what we're seeing here take hold.
Okay. And so let's maybe switch gears here. I want to leave some time. There's a lot of great questions that are coming in, so I want to leave some time for Q&A. But I also just want to spend kind of the next few minutes or so just talking about some of kind of the benefits and of holding ARKX, but also how it kind of fits in kind of a broader equity portfolio. So here's 5 of the main reasons why we think investors should really consider an allocation to ARKX. One is it provides exposure to innovation, right? That's all we do at ARK and all of our strategies provide kind of exposure to innovation. And why that's important is really that it provides kind of forward-looking exposure to these opportunities. As Sam mentioned, many of them could be multi-billion, some maybe even multi-trillion-dollar opportunities. And if you invest on kind of focused on maybe a benchmark or an index, S&P 500, for instance, that's backward looking based on past success. And that's, past success obviously is not indicative of future success. And so our view is if you're focusing more on innovation, you can kind of provide that more forward looking exposure. And one of the areas that we think is, really inefficiently priced is kind of the all of these areas we've touched on, the aerospace industry to the enabling technologies, and then ultimately the beneficiaries of the aerospace industries. So we think that provides nice exposure to innovation. This is just one of the avenues to gain exposure, and that provides kind of that second reason, growth potential. Right, everything we do is based on long-term capital growth. So our time horizon is a minimum of 5 years. Right, so this is not about making an investment and watching it double in 6 months. Our target rate of return or our hurdle rate for the fund, and this is true for all of ARK strategies, is to achieve a 15% annualized return over the next 5 years or full market cycle. So this can provide that growth potential in kind of your growth bucket of your portfolio. It also provides diversification, right? So what we've noticed is we're focused on those 5 innovation platforms: energy storage, robotics, artificial intelligence, genome sequencing, and blockchain technology. If you break those down further, into kind of 14 transformational technologies, one of which is reusable rockets, so one that we're focused on in this fund. But what's happening in, say, the companies associated with reusable rockets or drones is not impacting kind of what's happening in companies that are focused on, say, gene editing. And so this provides having exposure to multiple ETFs focused on innovation can provide kind of further diversification. This one in particular, having that exposure to space, which is actually pretty interestingly less correlated with kind of the more growth technology oriented stocks. So this is we've seen kind of perform a little bit better in this rotation from growth to value, as it has some more cyclical characteristics. And then the fourth is really, it's grounded in our research. Sam kind of walked you through a lot of that top-down work. I think that's really what differentiates ARK, is that we're sizing these opportunities. We're starting, from really a blank sheet of paper, right? This is all first principles research, right? So we don't leverage any third-party reports. This is all being conducted by our analyst team that have that domain expertise in each of these areas. So that is combined with the bottom up to help us identify, well, who's best positioned to be the winner in each of these areas, and that's how we allocate our capital. We don't just pick a theme, right? And you'll notice this in the portfolio. It's a fairly concentrated portfolio. we don't just invest broadly across every single company that mentions, space exploration, right, or satellites. We are very selective in the companies that we invest in, and it has to kind of go through a very rigorous bottom-up process to actually make its way into the portfolio. And then finally, this exposure is fairly cost-effective. It's relative to alternative mutual funds and other exchange-traded fund products. This is actively managed, right? So this isn't a passive. This isn't providing passive exposure. It's not linked to an index. We are actively managing, trading the portfolio on basically a daily basis, and the fee for the ETF is 75 basis points. So those are the 5 reasons to consider it. This is just a snapshot of what the portfolio looks like, and in fact, I'll take one of the questions that popped up here, which was 32% of your ETF are in 5 stocks. Why is that the case? So we build, and the typical size of the portfolio will be anywhere from 40 to 50 stocks. And you will notice that the top 10 holdings will make up, a significant portion of the portfolio. In this case, it takes up a majority of the portfolio. And that's because these portfolios are weighted by conviction. So as part of our kind of bottom-up scoring process, the higher the score, the higher the conviction in the name, the higher the weighting in the portfolio. So we stand by our research. We have very high conviction in those top 5 names, really all top 10 here. And so we are comfortable with having larger exposure to these individual names. Now, we do kind of manage that risk in terms of, we won't buy up. We'll buy up to 10% in a single name. We typically kind of allow that to drift maybe a few percentage points above that, so 12, 13% before we bring it back down. But for the most part, we're staying below kind of that 10% in a single name. And then you'll also see, the various exposure to those 4 elements that we discussed and how we think about the portfolio. So we don't think we put it here, but the sectors and the breakdowns, but we don't think in terms of sectors or industries. We think in terms of technologies and how these technologies are impacting the stocks, and that's how we cover these individual names. So again, you'll notice that by sector weighting, industrials is the largest weight, and again, that's what's playing into kind of this recent market rotation and has been benefiting the strategy versus kind of some of the more growth tech oriented strategies. And then finally, this is a global and all cap strategy, right? So we go where the innovation takes us. We don't bucket ourselves into just the U.S. or just kind of mid cap stocks. We will invest kind of where these companies lie, and each of these areas, when you look at the aerospace beneficiaries versus some of the enabling technologies like 3D printing, they may be smaller companies as these are kind of more emerging industries and fairly fragmented. So there's multiple companies that we think will eventually start to consolidate, but they take various forms and sizes. So it's important to kind of note that this portfolio is really capturing and having broad exposure, and it's global in nature. And then finally, just to touch on performance before we jump into the questions. So the fund was launched on March 30th of this year. So relatively short track record in the actual ETF. However, we have been managing this strategy, which dates back to August 2018, so a little more than about 2.5 years. So there is kind of we've been focused on this area for several years, and that's where kind of our research really plays into this. And we think by launching this ETF provides an opportunity for investors in the U.S. market to gain more targeted exposure to these areas. So we're now up to $650 million in this ETF after only a little more than a month since the launch. The performance again has lagged the broader market year to date, and this is through yesterday. It was down about 4.7%. However, we think from here on out, we look again 5 years out, and we think that the strategy can provide an attractive return on a look forward basis based on our 5-year expected price target. So again, the fund we're trying to achieve is a kind of an absolute return metric, in that we're looking to achieve 15% annualized return. And we think a lot of these names, and with this kind of recent market sell-off, is creating a lot of opportunities for us. And we're really taking advantage of that. We think these are a little bit more short-term oriented, and it doesn't necessarily impact kind of the technologies and their ability to gain adoption over the longer term or medium to longer term. And therefore, we're getting a lot of great deals out there. And so you'll notice that we've been a little bit more active in our trading just recently, given the market volatility. And we're starting to build some of these positions that we have very high conviction in. So with that, maybe we have about 10 minutes left here, and we can start to kind of answer some of these questions. So the first question.
Ren, sorry. Do you mind? I'll jump in because I see while you were talking, I was going through some of these questions. I was like, okay, let me group some of these together. And so, there's a few questions about urban versus remote or versus rural. Is satellite broadband comparable with 5G? And how to think about that. And so, I think it is possible that you could get more sprawl, especially if you have air taxis. You have internet everywhere. But when thinking about satellite broadband versus 5G, 5G is, and this is my understanding, is very optimized for densely populated areas, whereas satellite broadband is not. And one way to think about this is that if you're connecting to a satellite, you're using some portion of that bandwidth. And so you can only have X number of customers who are trying to use the same satellite for internet. And so if you had a city type population or a heavily populated area and everyone has a satellite and they're trying to connect to the same satellite internet, it wouldn't work. So, satellite broadband is really meant for rural areas. And then another question here is about the Concorde plane, and that was fast. It wasn't hypersonic. It was supersonic, and so there were problems with costs, sonic booms, and restrictions on where it could fly. Does this new idea of hypersonic solve this? And so I think right now it's very early days, and there's actually a few different ways that people are looking to tackle this. One would be to go kind of to suborbital area, where one of the biggest problems with hypersonic is the heat. And if you're going that fast, the friction against the atmosphere creates a lot of heat. So the higher up you go, the less air resistance, and in theory, you reduce that type of problem. So it's possible that at that altitude, maybe you're not even concerned about this type of noise. And then there are other people, and this has been something that Musk proposed, and he said, why wouldn't you just take a rocket there, right? And, fly from, one part of the Earth to the other on a orbital trajectory, in which case, you have the noise at the landing site. And so likely it would have to be somewhere offshore. And so, that could reduce the convenience of that or restrict it somewhat. But there are these different angles that people are looking at for that.
Maybe I'll group. There's two questions kind of related to private equity. So, is there any exposure to private equity? And then somebody also asked, do you have access to SpaceX in the fund? So, maybe I'll take that one. So this is a portfolio that only invests in publicly listed securities, so it's public equities only. So we don't have the ability to invest in private equity or SpaceX. If it were to come public, obviously it would be part of the universe. What I would say is what's been kind of an interesting trend over the last, I'd say, maybe 12 to 18 months is that we've seen a pretty significant pickup in private companies going public. And so that has been kind of opening up our universe and, allowing us the ability to invest in some of the names that we have been tracking on the private equity side. So we do track a lot of these companies because they could be potential competitors to some of the names that we already own in the portfolio. And then once they become public, they could be opportunities that we may want to, invest in. Obviously, it goes through the same process. And what's kind of steered us away from a lot of these more recent IPOs has been kind of the valuation side of things, and not being able to achieve that potential 15% return. So we've seen that we've passed on a number of opportunities of some of these companies that have gone public more recently. I guess on that topic, I see, do you have exposure to Rocket Labs, the SPAC? So there are, I know there's a number of kind of space related SPACs that have come out there, that have come out to market just in the last 6 months or so. And you'll notice that we don't have much exposure to them. Sam, do you want to take that one in terms of kind of why that is?
Sure. And so, part of it is there's been a huge increase in the number of these public companies, as Ren said. And given that it is a concentrated portfolio, we really do the research to make sure that, the companies we're investing in, we think are going to be these long-term winners. And so that's not to say that none of them will ever be in there. It's just saying that, at this current time, and the market was very hot, and I think there were a lot of expectations built into companies. And space is hard, and it takes a lot of time and money and effort. And we're going to make sure that we do the research such that we think we can pick the winners, as opposed to what Ren was saying, just investing in every company that says they're space related. And then, also on this note, I see questions about Starlink as well. Just for everyone, Starlink is the satellite broadband solution that SpaceX is working on, and they've talked about it going public. I have no information other than what's been said out there, so I'll just repeat that as the answer. And very few companies have launched satellite constellations without going bankrupt. They're trying to achieve that, and they think that when they get to a point where they have predictable cash flows, then they would look at bringing that public.
Mm-hmm. We're coming up on time. Maybe we have time for maybe just like 2 or 3 more questions. Some quick ones. What percentage of your companies are in your portfolio are profitable? This is an interesting one. A question that we get fairly often around kind of PE ratios. One point I do want to make is that we're less concerned with bottom line and earnings. We are looking for top line growth, and a lot of that. A lot of the valuation work that we do is based on some of those top-down expectations on how big these industries could be. And that is kind of filtering through or funneling through to our valuation work. So it's less, we like to see companies that may be sacrificing earnings but investing very heavily in R&D and capital expenditures to take advantage of these longer-term opportunities. And that's certainly the case and requires a lot of capital expenditures in this particular kind of theme. So less concerned with kind of profitability, more so with top line growth. Sam, this other one, this is one we actually get fairly often is, will Earthlink compete with Iridium? Do you want to take that one?
Sure. And this is what I was talking about earlier, kind of different use cases here. And oftentimes they'll be side by side. An Iridium solution is lower connectivity rate. So it's like it won't be as fast, but it'll be there no matter what. Whereas a Starlink type of connection will be far faster upload, download, but has the potential to be interfered with more so on a weather front. And so the use cases for Iridium are those situations where you can never lose connectivity. And that's why, that maritime distress signal, all of their personal communication, that's why the government likes it so much. What we're seeing is, they probably have a potential for drones and beyond line of sight drones so that they're constantly tracked. And this goes into that, how are you going to do air traffic control for drones? And I think that's probably something more so on the Iridium side. And then kind of on a technical side, since it is a different type of antenna, right? The Starlink dish is big. It's big and it has to be big. Obviously, they're going to work over time to reduce the size and cost of it. But the Iridium end user antenna, right? People have it in the little handset. It is something that could fit on a drone. So, there's definitely a symbiotic relationship here.
Mm-hmm. Well, unfortunately, we are out of time. I know there's still a handful of questions. We'll get that list and reach out to you to address some of those additional questions that we didn't get time to. But I just want to thank everyone who joined today's call. Thank you, Sam. Very interesting conversation. And for those of you that would like to learn more about the ARK Space Exploration and Innovation ETF, ticker ARKX, I encourage you to take a look at our website, ark-funds.com, and there's a lot of additional information on the fund and our ETF suite for you to take a look at. So thank you, everyone, again, and have a nice day.